Before we get into the show and introduce today's guest, I would just like to thank United Medical Credit for being sponsors of this podcast and of the business of dentistry. As a matter of fact, they have a special offer for business of dentistry members, 0% merchant fees for the rest of the year, and 30% discount for life after that. You can get that special deal by either going to docoffinvestments.com and clicking on the deals section, or by going directly to www.unitedmedicalcredit.com/TBOD. Thanks again, UMC.
Welcome to the Dear Doc Podcast, where we will discuss the business of running a dental practice with a panel of experts. Now, your host, Dr. Christopher Hoffpower.
Another episode of the Dear Doc Podcast. Today we have got a real special treat. One of our longtime sponsors here at the Dear Doc Podcast, United Medical Credit, and their CEO and president, Matt Libman, is here to talk to us a little bit about a really, really awesome offer that they've got going on right now. So, Matt, how are you doing, man? Long time no see.
I'm doing well, Doc. How are you?
Man, I'll tell you what, between hurricanes and coronavirus, we're surviving down here.
That's great. It's nice and sunny here in California.
Oh man, I'm a little bit jealous of your weather. Perhaps not of your tax system or politics over there.
Oh no, yes.
No.
We can go into that another day.
Oh no. So Matt, we were talking the other day, and you told me you guys had this really awesome new initiative you were doing. You want to really come out as a strong contender to be the first and only credit source that people use in their practices. And so you guys are doing this really special promotion. If I'm not mistaken, until the end of the year, there's no merchant fees. Is that correct?
That's right. It was very hard for me to make that decision because I have to negotiate it with all the partners that we work with.
Right.
But we really want to increase our base of loyal merchants and providers and doctors. And we decided that for the rest of 2021, so that's a little over 3 months, we want to make it free for the doctor I like using the word free. It sounds a lot better than no merchant fee. Even if I discounted it, free sounds so much better. So it's free for the doctor.
Like free stuff.
Yep, exactly. On all standard loans. So I don't want to confuse the doctors. If we do same as cash, 6 month, 12 month, that just inherently costs money to cover the interest. But for the standard loans, which is the most popular product we have, it is free for the doctor for the rest of the year if they enroll. And we'll even give some of your doctors that are already enrolled with us the same offer if they reach out to us.
That's fantastic. So that people know a little bit more about what it is that UMC does, you guys have one of the widest credit bases that you approve in the industry. And it's because you have a very unique system of how you do the approval. You kind of waterfall it through different banks, you find the best fit, and you get people financed. And the more people get financed, the more treatment gets accepted, the more profit for the dental office.
That's right. It's a very simple system when you think about it. We want to give the doctors the peace of mind that if they send it to us and we deny it, nobody can approve it, or at least nobody can approve it for a reasonable rate to the consumer. Because I'm sure you can get one of those 100% interest rate payday loans for a consumer somewhere. We don't want to do that.
No.
So what we do is we get the patient when they apply, we do a soft credit pull. That means no hard credit check on that patient behind the scenes. And by looking at their credit, we know which lender to send it to. So we have a suite of lenders that we use, and we'll send it to lender A. And if lender A declines it, it will automatically go to lender B, C, D, E, F until we get an approval. And if we don't get an approval, at least you know that we tried our best and you tried your best to get that patient approved. And they can always get a cosigner too.
That's fantastic. Now, for people who don't really follow this stuff, I'm kind of a geek about it. I really look at this stuff, but a lot of doctors, they're just looking for some way to get their patients financed, and they're very frustrated. Some of the big names in the industry are only loaning down to like a 680, and that's a pretty decent credit score. But you guys go much, much lower. You goes down to 528, if I'm not mistaken. Is that correct?
If we like to say 525, once you get under about 575, so from 575 down to 525, not everyone's going to get approved. You will get some approvals at the 525 credit score. It's usually people that hurt their credit badly, but spent the last 2 years trying to fix it. And we can tell if they've been working on it. So they may still have a 525, but we know they're making an attempt to work on their credit. So we'll be able to help them through one of our, lending partners in that sense.
I imagine there's a lot of our patients who are in that situation right now simply because of, like I said, the last couple of years have been insane. And a lot of people have gone without work, and a lot of people have gone out of business. So
that's
I
right.
imagine there's a lot of credit scores that took some damage. And one of the other things that you've got to look for is the debt to income ratio. If somebody's got way more debt than they have income, obviously they're not going to be a great credit risk, even if they have like a 680 credit score, right? So
that's right.
So talk to me a little bit about UMC. I mean, Matt, you kind of came out of nowhere a couple years ago, and you brought in some really great talent who had been in the industry for a long time, and it seems like you guys were kind of determined to make something different. So tell me the UMC story.
Great, I will. Let me adjust my camera here a little bit so I'm looking right at it. Okay, so actually, we just had our 10-year anniversary. We've been in business a long time. Not many people know about us, but as of September 1st, we just hit 10 years in business. So you know what they say about businesses that are in 10 years. That means they're a very strong business and they're going to be around for a long time. So I actually launched the company in 2011. I saw a need for medical providers to be able to help patients that don't get approved, because all the lenders out there, like Care Credit at the time, they just wanted the best of the best.
Right.
So we came out and we were like, let's make deals with lenders that look at people with less than perfect credit to put them in a waterfall to help more people for these doctors. And it just took off from day one. September 1st, 2011, we were doing loans on day one. The doctors loved us. Most of our business back then was in cosmetic surgery. So you all in the dental world probably never heard of us until recently.
Right. Well, and I think you came onto my radar, what was it, 2 years ago or so, whenever we first started.
A few years ago, yeah. Yep.
Exactly. Actually, you're right. It was more. COVID kind of erased a whole section of my brain.
Yes. So it was 2 years prior to COVID.
Right. So if our listeners want to know more about the credit industry, can you tell us, like, just framework wise, big picture, tell us what the backside of the credit industry looks like and what makes you guys so different there. I mean, let's talk about the usual lenders. So you've got your big names, and you brought up the name. I usually try to not bring up the name of competitors, but Care Credit, all right, or Lending Tree or someone like that. You guys have a very different system. What is their system, and how does yours differ from it, and why is that so great for the doctors out there?
Great. So first off, there are really two types of lenders in this world. There are the point of need lenders. That's like a Care Credit. That's where the lender takes the money, they bypass the consumer and they give that money straight to the doctor. And then there are lenders that work with companies like you said, Lending Tree. But then those lenders will just give the money to the consumer. Say going to Bank of America, getting a loan, they put the cash in your bank account. So there are two types of lenders. When you do point of need, you're able to approve more people because they know the money's going to what they underwrote for, which is, in this case, it would be a dental procedure. So of the point of need lenders, there are lenders that only every lender has their own way of looking at people, right? They have their own way, they have their own bucket. So for example, Care Credit, they want people with good to excellent credit, and based off their income, based off their credit score, they'll approve them. So Care Credit may say we have a 90% approval rate, but a portion of those approvals will get approved for less than the procedure amount, and then you're in trouble. So what we try to do is we try to be a little bit more uniform in the approval process and approve patients. So if somebody with, let's say, a 600 credit score, something that Care Credit would probably decline or approve for maybe only $1,000, we'll look at them and we'll say, okay, their total procedure is $4,000. we'll approve them for the full amount.
Right. So what's great there is you don't have to keep scrambling, and it maybe even damage the patient's already damaged credit score because they're doing refinancing at a bunch of different places to get the money from a bunch of people. But what's really nice is you guys actually have a pretty wide window so far as what you can finance. I mean, what is I believe your bottom is what, $1,000? What is your top end?
I think a tiny bit less. I think we go down to $800 right now.
Okay. But
we can go up to, at this moment in time, up to $25,000, but we're working on doubling that.
Excellent. Yeah, I remember that conversation. I said, but that's only one arch.
Yeah.
So, guys, if you're looking for someone to increase your case acceptance by giving patients the money they need to pay for treatment and making sure that money goes into your pocket and not necessarily into the patient's pocket, UMC is a great fit. Now, talk to me a little bit about how soon you guys fund.
So we actually, so the rule, I know most doctors don't work that way, but technically you're supposed to fund after the procedure is performed. So it's actually our policy to fund prior to that. We like funding the doctors a week prior to any procedure being performed. Gotcha. And we'll allow that patient to apply up to 60 days prior to any medical procedure. So you can have the money in your hands prior to, working on your patient.
Excellent. Now, some of the financiers out there, and I'm not going to name any names. I think you're probably going to know exactly who I'm talking about here. At least one of the major financiers, third-party financiers, had gone after doctors and taken money back. A patient calls up and complains, and they just go in and they take the money back, no questions asked, and the doctor's left holding the bag. Talk to me.
I've heard those. Yeah. So from the beginning, from 10 years ago, I know how it works. I know how doctors think. Nobody wants somebody going into their account and just pulling out money and asking questions later. There are times where a patient will call us and say, I never had my procedure. I want my money back. But where another lender would just pull out the money based off what the patient said, which is, we all know that's not always the truth.
Right.
We have a whole, you get a human to work with your doctor's office. Every doctor that works with us has a human that only have a handful of merchants in their name to work with them. So what would happen is if the patient calls and
I was going to bring that up next because I think that's one of the really cool, unique selling propositions you guys have. But go ahead.
We're not run by computers. I can tell you that. In fact, our tech is pretty. It's not like Care Credit. We invest in humans. We invest in people to give that real touch to the doctor's office. But back to a dispute, let's call it, where a normal lender would just pull the money out of the doctor's office. Your account manager will email you most of the time. We don't use phone calls that much anymore. They'll email you. They'll say, hey, Chris here is saying they never had their procedure and they want to cancel the loan. Is it okay if we pull the money back? And we're not going to pull that money back unless you say it's okay. Because you may say, oh, I've incurred $1,000 in fees. I already paid for anesthesia. I already paid for the surgery center. So what we would say is, okay, invoice the consumer, find out how much they spent already, and send us the difference so we can solve this dispute with the consumer. Or sometimes the patient's lying, and we'll back you up. We'll back you up all the time. If you could prove the procedure took place, we'll never pull the money back from you. That's the only time you can get money taken back, is if the procedure did not happen in its entirety.
That's fantastic. So what do you suggest for longer term procedures? Like, let's say we've got someone who's doing a traditional hybrid. So they're going to get their implants placed. Let's say they're going to be in a temporary for a while, and then they're going to get the hybrid, 6 months down the road.
Yeah.
Would you suggest that the doctors finance those in two portions to make sure
two portions?
That's kind of what I thought too.
If it was like 60 days, we would say just finance everything up front. But when you get into like over 3 months, life happens. So we don't want to do a loan for like let's say $25,000. and they come in for half the procedure, and then they decide to go, whatever the reason is, they don't want to do it anymore. So we don't want to have a dispute over that reason. So we'll just say, okay, finance the first half now. And then when they're ready for the second half, we'll finance the second half, because life happens.
Absolutely. Now, a question I have for that is, let's say I've got a package deal. I mean, Matt, you've been in the industry long enough. You know how these things work. So
yeah.
if I charge out 6 implants, and I charge out the, MUAs, and I charge out the hybrid denture, all of that's going to come out probably to about $100,000. But then I'm going to trim it back and say, okay, look, this is 50, or this is 35, or what have you. Well, let's say the patient says, well, I only got half of it done, but the lion's share of the cost was in the first half. Should the doctor then just invoice the patient for that remaining portion?
You
would want that was already completed at the full prices, or how do you recommend they do that?
You would want to charge the heavier portion in front. So let's say it's like a $50,000 retail value of the procedure, but you're doing it for 25.
Right.
You would say, okay, since this takes 6 months, let's do half the procedure now and half later, but your first half of the procedure costs $15,000 and you have to do that now. The second half is 10. So if they quit after the first half, you're made whole.
Absolutely.
And I mean, that's up to you. It's your choice. We'll do the loan either way.
Just as a heads up, I do a good number of these procedures in my practice, and what we do is we actually have a disclaimer that says, look, you've got a package deal. This is the normal wholesale cost or the normal unit cost of everything that's included in that package, but because you're getting everything done and you're paying for it all at once, it's only this much. If for any reason you discontinue treatment, you owe the full price for anything that's been done previously. Yep. And that seems to discourage that kind of thing.
Yeah, as long as you have the money from us, you're good. And the best thing to do is, as long as the consumer understands, like if the office is like hiding some of the truth and then the patient doesn't understand, that's where we get all disputes are misunderstandings. So as long as the patient is like, yeah, I know what I signed up for, it's okay, then we won't have an issue. And so it's when the patient like truly thinks they're right is when those disputes happen, and we'll have to try to at least make them happy so they don't write 1 million bad reviews about all of us.
Right. So talk to me a little bit about some of the things that working on your side of dentistry you've experienced that you've had to deal with as a company to keep your customers, the doctors, happy and still keep the patients happy. Obviously, don't name any names here, but just some of the things that you've encountered.
So I would say to keep doctors happy, I would say back to disputes. We take the doctor's side on disputes as long as it is reasonable. Like if the patient comes in, we give you $10,000 and they have a medical issue and they want to cancel and you don't give any of the money back, that will be a problem.
Right.
But if you do half the procedure, the patient is in pain, they want half the money back, and you're like, well, it cost me 7, not half, then we'll have to explain to the patient, here's the invoice, here's your change, have a nice day. Are you looking for another scenario? If you want to help me out, put me on the right track here.
Any other scenario you guys have encountered that you think these doctors might have some benefit from? Something that's happened in some other practice that you guys had to step in, that it might help doctors not make that same mistake.
I would say just making sure that you quote the right amount for the procedure before the loan is originated. So we don't have to do a second loan for a small amount, or we don't have to do a refund for the difference. That usually is the cleanest method to that I would tell doctors. And if anything, I'd rather you quote more than less, because it's easier for you to say, hey, credit this patient $1,000, we'll pull $1,000 from your account and credit their loan the difference. It's a lot harder doing that second loan for a small amount.
Absolutely. And Matt, we're going to take a little break here for a word from our sponsor, UMC. Hey guys, now a quick word about our sponsor. I'm really excited to announce that we've partnered with United Medical Credit to offer an exclusive deal just to TBOD members. Now, United Medical Credit is a patient financing provider with a unique waterfall lending process. It allows them to approve a much wider range of applicants. In fact, the widest range of applicants in the entire field. I've been using United Medical Credit in my practice for a couple of years now, and I'm seeing great results. They really speak for themselves. I see at least 30% increase in the number of patients who are actually approved whenever going through UMC. And the best part is, patients are accepting treatment. More acceptance, more patients means more revenue. Right now, they're offering TVOD members a special discount of 0% merchant fees until the end of the year. That's right, until the end of 2021, you get 0% merchant fees charged. And they're going to give you a 30% discount for life after that. Now, if you want to claim this offer for your practice, go to www.unitedmedicalcredit.com/TBOD, or as always, you can go to Doc Off Investments, click on the deal section, look up UMC, and register. Thanks a lot, guys, and UMC, thanks for sponsoring. So before we went away to our commercial break by our wonderful sponsors at United Medical Credit, we were talking a little bit about the fact that communication is the key to making sure there are no disputes in financing. Are there any finance laws that our doctors need to know about to protect themselves? Anything you can think of that might be just some great value they can take away from this, even if they're not using UMC?
Yeah, I mean, you can't obviously discriminate, and anything that, to not give a loan to somebody for whatever reason. You can't charge fees to get the loan at your office. I mean, look, there are laws for everything. So as long as you are playing within the rules, how you've been doing it for as long as you've been in business, and you operate business with care, you're not going to have any problems. We'd let you know if there was a problem in regards to not following the rules with regards to financing. We'll let you know pretty quickly.
Now, there's a question right there that you actually just touched on that I've heard a lot, and I see some conflicting information about it. And that is when someone comes in and they've got a credit card that they want to pay with, there's going to be a merchant fee, merchant services fee, or there is a loan with an origination fee, or there is a flat percentage of that loan that's charged to the doctors. Now, there have been some recent changes to the law that evidently allow you to charge that surcharge directly to the client.
That's right.
Does that include origination fees for loans, or our merchant fees that we're charged for the loan, or not?
You shouldn't be connecting the two. If you have your own policy in-house and it's compliant with your state laws. I mean, we operate in all 50 states.
Gotcha.
Every state has different laws. So if you're operating within your state's laws, we don't have a problem with it. Now, sometimes what I've seen, so you could be operating within the state law. Let's say you're allowed to surcharge the fee to the consumer. If the consumer is like surprised about it, it could cause problems. So like if the consumer comes to us and they're like, they charged me $1,000 to get your loan, I didn't know about this, we'll call you and say, hey, what's going on? So if you do charge fees, make sure it's very well known in your practice. Make sure you have a sign up, make sure they sign for it, make sure they know what they're signing up for. And then as long as again, it's all about communication. As long as the consumer knows what they're getting, we won't have any issues.
Fantastic. Great advice as always. So I think that that pretty much just brings us to Matt talking about Matt. So you started this company about 10 years ago.
Yep.
And what did you do before that? I know you saw this need, but where was that path? What led you?
So I actually worked for another patient financing company prior to this, just for a couple years.
Okay. Are you allowed to say who?
They did somewhat the same thing that we do now. somewhat of the same thing, but they were more old-fashioned. They had more lenders that required a lot of like stipulations from the consumer, full pay stubs, ID, utility bill. I mean, some of them didn't even allow e-signatures. Can you believe that? So I took all the knowledge.
Seen that, so yes, I can believe it.
Yeah. So I took all the knowledge that I learned from that and brought it here, and made it everything e-signature. No little steps, if any. There are some loans in the very deep subprime that may require proof of income, but a majority of our loans do not require any stipulations at all. Just an ID to verify that person is who they say they are.
I don't know if a whole lot of people have actually looked at some of the paperwork from some of these third-party financiers, but goodness, I mean, it's like a ream of documents that these patients have to sign up for, and that just puts.
It's true, yeah. As the finance industry evolves and there's more fintech players out there, and more people are in the cloud, it becomes easier and easier to bypass all that. So I mean, when we first launched, I would say maybe half our loans had required full stipulations, which means utility bill, pay stubs, and everything. Right. Now it's maybe 5% of our loans.
That's fantastic. Well, you make it easier for the consumer to get credit, make it easier for them to pay their doctor. I mean, guys, what more do you want? Matt, is there anything that I should have asked at this point that I have forgotten to ask or I didn't think to?
I don't think so. I just want to put emphasis behind the promotion. That's a big deal. 0%. I mean, let me give you an example of how big of a deal it is. Let's say your merchant fee was 7%, and you did $1 million in loans in the next 3 months, which some dental offices around the country can easily do. That's $330,000 a month in loans. You will save $70,000 cash, net cash.
That's
in the next 3 months.
Right there.
It could be a boat. It could be bonuses to your staff. It could be anything. So it's a really big deal. I mean, we're not making money on these loans. We're making deals with our lenders to do this. So
well, I think that's one of the most appealing things about you guys as a company is you believe enough in what it is you're doing, and you believe enough in the product that you're offering that you're willing to put it out there for free, basically.
Yep.
And willing to lose money on that to prove to people how good you are. And I think that's a really compelling reason for anyone to sign up. And let's face it, guys, times are tough. People need credit.
Yeah.
The American consumer doesn't think about dentistry. They think about big screen TVs and iPads and the latest iPhone or Apple Watch or what have you, or even a nice cruise for their family. Whenever these things happen, patients need a way to pay if they're going to get their treatment done, and UMC offers looser credit than just about anybody in the industry. They pay you directly as the doctor, so you don't have to worry about them taking that money for the root canal and running off on the cruise. And even better, they give you a personalized assistant who is going to handle your practice, who has a name, a face, and actual internal organs that are not made of silicone.
Yes,
so
that is right.
Well, Matt, thank you very much for coming on today and giving our listeners a little bit of an idea of exactly what it is that UMC does. And thank you again for always being such loyal sponsors of both the Business of Dentistry and the Dear Doc podcast.
You're welcome, Doc.
Well, guys, go check out that link down below and sign up for UMC and use it. You'll save money, you'll make some patients happy, and your production will increase. See you guys.
Thank
This
you,
is Doc
everyone.
Huffbauer signing off.
Thanks for listening to the Dear Doc podcast, your source for the business and legal questions associated with your dental practice. Don't forget to subscribe to the Dear Doc podcast on all major platforms.
Hey folks, before I let you go, I just wanted to make sure I thank United Medical Credit for sponsoring this CAP podcast and also the Business of Dentistry. Go check out their website at www.unitedmedicalcredit.com/TBOD to get a special deal.